to everyone, wherever you guys are based. This is Naeem Aslam, Chief Market Analyst at AvaTrade. Please say yes if you guys can hear me, and you can also see my display as well. All right, okay, so the voice is clear, the display is crisp. That is what we want to see. This is amazing. So thank you so much for guys for taking the time out as always to come and attend our session, our weekly masterclass sessions that I hold. My name is Naeem Aslam. I'm a Chief Market Analyst at AvaTrade with a husky voice today because I'm suffering from flu. Hopefully, so it won't turn out to be something a bit more serious than just a flu. At AvaTrade, I had research for the company. All the articles that you read on AvaTrade's website, they are written by myself. The research pieces in terms of stocks, forex, and commodities. And on a daily basis, the videos in terms of a technical and fundamental videos, which I will show it to you guys in a bit, they are also conducted by myself. My experience spans well over 15 years of trading experience. I have worked as a hedge fund trader for Bank of New York Mellon and also for Bank of America. Over the last 10 years, I've been heading research for various different companies. And now, of course, I am working as a chief analyst for AvaTrade. So that is a little bit about myself. So let's learn a little bit about you guys. So please tell us a little bit about yourself. So the first question in a series of questions I wanted to ask you guys is, please say yes if you have been trading under a year. What this does is this helps me to gauge the complexity about my audience so that I can really fine tune my narrative and my stance accordingly. Okay, so please say yes if you've been trading over 2 years. Okay, wonderful. Now, the last and the final question, please say yes if you have attended any of my previous webinars. And bear in mind, all of these webinars are recorded. And if you ever wanted to hear any of the previous webinars, you can go back to our YouTube channel and you can listen to them, as well as our TV interviews that I conduct on a weekly basis with all the tier 1 media, which includes CNBC, Bloomberg, so on and so forth. And if you wanted to read our thoughts in Wall Street Journal and CNBC, you will also see them on a daily basis across various different media outlets. All right, okay, folks. So let's continue. That's really good to know that we have some regular guys who've already attended my webinars and some newbies as well. So before, as always, before we start, it is important for me to go through this slide of disclaimers and risk warnings. So anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, some of the important bits, as always, I'm going to continue to stress the importance of you guys being on Twitter and staying in tune with the market, and especially the news, which really moves the market, because today's webinar is about the ECB. And remember, tomorrow at this time we are going to see enormous amount of volatility for the euro dollar, and of course for euro sterling, anything which trades against the euro, and also for European indices as well. Now, if you want to learn like what is going to move that, how you're going to know it, of course, you can go to your general tier 1 media outlets like Wall Street Journal and all of that. But before you learn anything from those websites, the thing is that the move would have, it'd be too late. The move would have already happened, and that means you'll be a little bit late in the game. So in order to learn everything in real time, Twitter is the best place in my opinion, because all the notifications gonna come straight to your mobile in relation to any moves that can possibly happen in Forex, commodity, equity, and fixed income space. And I am very active on Twitter. This gives you guys the opportunity to interact and ask me questions, and I'll try to answer them as quickly as possible. So the Twitter handles are right in front of you guys, and I'll also explain. I will also show it to you guys in a bit as well. But if you guys aren't on Twitter, I'll highly recommend you guys to make an account on Twitter and make sure that you follow and interact and ask questions. Secondly is YouTube channel. YouTube is quite important as well. This is where on a daily basis I produce a fundamental video. I break down things at a very elementary level for you guys to digest and understand. And a small video of that also goes on Twitter as well, which is even more simpler version of that. And for those traders who do understand trading a bit more, who understand technical analysis, on a daily basis, I also put an analysis in a technical in technical analysis as well on some of the major assets that are likely to move that particular day and how the trading can really turn out from there onwards. So let me show you guys what do I mean by that. Sure, buddies, don't worry about it. I'm going to show you the Twitter handle just now. So the Twitter handle is right in front of you for myself, which is Naeem Aslam23, right in front of you. And you can see that it is fairly active. I produced, like yesterday, Tesla stock plummeted over 21%. And today I have put this tweet out along with the research that what does this mean is Twitter is ready to bounce back up. So go and have a read of that, what we talked about. And then there is this video, me talking about, okay, what to expect from a market, what is likely to meet the market, what it really means for the indices and the levels within those indices. So it is quite an interesting one to do that. And of course, then some other thoughts on a daily basis in terms of moving averages, in terms of prices and everything else. So I think it is quite intriguing for you guys to really understand and then follow that. And as with respect to AvaTrade, please make sure that when you are following, you're following the right account, because AvaTrade's account is verified on Twitter. So whenever you're doing that, you are going to make sure that you are following the right account. Now, with respect to YouTube, this is the AvaTrade's YouTube channel, and here are our daily videos which I produce. So go and have a look at them, and then make sure you understand, what exactly is going on with respect to these videos. Again, they are quite an interesting ones, and a lot is happening over there as well. So all of this is quite an interesting one for you guys to understand. Now let's go back to our presentation and let's continue from there onwards. Now, in terms of our agenda, what really is on the agenda is the importance of the ECB meeting. What to expect from the ECB, what instruments to trade, the current state of markets and analysis, defining levels and defining strategy. Okay, someone is asking me, so put a question with AvaTrade Twitter. What are you saying? I have a question with regards to a regular euro analysis on AvaTrade Twitter. Are those purely technical or also with a fundamental part? This might be interesting for tomorrow. Okay, folks, with AvaTrade Twitter, so we have something which talks about the levels quite a lot throughout the day, but there is also a fundamental analysis there as well, which I kind of tweet about the various different thoughts on the market. And then on our AvaTrade's website, there's a full fundamental research on that as well. And a large portion of that will be going up tomorrow morning before 9:30 a.m. London time. So you'll be able to read all of that. Now, the importance of the ECB meeting, why the ECB meeting is most important. Now, first of all, folks, ECB stands for European Central Bank. European Central Bank determines the interest rate for all the Eurozone countries, right? So the big countries like Germany, Spain, Italy, France, so on and so forth. Now, it also determines the monetary policy of that. So what the ECB will say tomorrow at 12:45 is really going to bring enormous amount of movement in the market. Now, what is expected from the ECB is no action is actually expected from the ECB, but at 1:30 p.m. So the actual announcement is at 12:45, but this is when the ECB will announce its announcement with respect to its. Let me just show you that as well, how to find all of that. So. So over here, where you can see it's on Thursday, these are London times at 12:45. The financing rate, which is the interest rate, and the monetary policy statement will be released at 12:45. So these are, so nothing is really expected to deviate from its mean, meaning everything is likely to remain the same. The interest rates, which are sitting at negative 0.5, they're going to be staying there. The monetary policy with respect to asset purchase program is also is likely to remain the same. But this is the event at 1:30 p.m. tomorrow, when Christine Lagarde, who is the president of the European Central Bank, will take the stage. And when she will start talking, it is expected that she is going to follow the footsteps of Mario Draghi, the ex-president of the European Central Bank. Now remember, Mario Draghi had this ability to move the currency without any action. Remember, whatever it takes at the time, when he used to use his powerful language and used to bring enormous amount of movements in the euro dollar. So that is what is really expected tomorrow. So what is expected tomorrow is, in terms of, now this is, we are really moving a bit forward with the idea as well. So what is expected tomorrow is, we are expecting a bit more weakness in the euro dollar, because euro dollar has been sitting at a tremendous strength, or at nearly 2 years high for the last few weeks or so. Because remember, it went above nearly 1:20 level right over here, and this was the level which we didn't see, since 2018. And so tomorrow, what is expected from the ECB, from Christine Lagarde, is that she's going to use the language by saying, with the possibility, now remember, with the possibility of reducing interest rate in order to control the movement of the currency, because ECB has two problems. Number one is the currency is moving higher, which is not really that great given the pandemic that we are seeing. The data is immensely fragile with respect to the ECB. First, we saw some sort of improvement in the European data, but now more recently, we have started to see a little bit of a deterioration of that economic data. And that means that ECB needs to kick in and need to be more support for the economy, and to assure investors that it is there to do whatever it takes. And secondly, the strength in the currency isn't really helping. So tomorrow at 1:30 p.m., we expect this euro dollar to weaken a little bit more. Now, this euro dollar can weaken all the way, perhaps to its previous resistance, which is right on top of this one of 1.16. This is the level that I am really looking at on a daily time frame. So let me just draw that that line for you guys to make a little bit more clear. So this is the area of previous resistance becoming support, is the area that I'm really looking at. And if the move is even more intense, now I do not expect the move to be even more intense than this, but if it becomes even more intense, then the next level of support is really going to be on top of these particular candles, which is going to be 1.1486. That is the level that we are really looking at. But at the same time, one needs to understand another important aspect as well, that this pink line that you see, or a purple line that you see on a daily time frame, this is your 50-day simple moving average. In order to add that, you just go into insert, you go into indicators, you go into trend. From here you add into moving average, and then you can do anything. So you from 200 period, which is this one right over here, you can change it to 50, change the color, change it to the method, simple or exponential, whatever. So all of these ones are simple. For instance, this particular one is your 100-day simple moving average. This is your 200-day moving average. The price, what I was saying to you, is already very, very close to its 100. It's a 50-day moving average. So there is a possibility tomorrow that the price may just go and then touch the lows of this particular candle right over here. And the low of that candle is sitting at 1.1815, right? So that is another probability. Or another probability is the price tests the lows of these candle, of this particular candle, which is at 1.1695. Now, for me, I think this particular low right over here is quite an intriguing one. And it is very, very likely tomorrow that when the ECB, when the Christine Lagarde starts speaking, excuse me, we may test the low of this one and quickly bounce back up. Because more recently, what we're seeing is a consolidation. This consolidation has been on this, it's confirming that the price is very much moving in the sideway action. And when we look at the RSI is still telling us that, look, the price is still quite far from reaching a level which is classified as an oversold level. Anything which is near 30 or below 30 on the RSI means that it is oversold. And when the price touches this level, that is an indication that prices are likely to reverse. So for example, over here, when the RSI was touching near the 30 or fell below the 30, it was indicating that the price, it was indicating that the prices are likely to reverse. And guess what happened? The price from there, it moved sharply to the upside. And that's what happened with the price and with the RSI. Give me 1 second there. Let me just drink some water. So what we're saying is this RSI was quite a reliable signal. Then the moment that the price reached over the level of 70, which is classified as oversold, and whenever the RSI gives you the signal of oversold, it means the price is due a retracement. And as you can see over here, euro dollar was in an overbought territory, was exploding to the upside. These kind of moves are called explosions. Explosions to the upside, explosions to the downside, explosion to the upside, explosion to the downside, explosion to the upside, sideways, explosion to the upside and sideways. Whenever explosion happens, RSI tends to be in an overbought or in oversold territory. And these are the points when you can really look for a trade on the opposite side. So over here, the RSI was telling us that yes, the price is way overbought and retracement is due. And guess what happened? Retracement happened. The RSI came back into oversold area, and that kind of triggered the look, the price is likely to go back up. And that's what happened. And then from here to here, price didn't do much, kind of, sideways track movement. The RSI kind of also started to track. And only up to here, when RSI gave us a signal that, look, the price is really overbought again, and then we saw a little bit of a retracement, and now at these levels for the last few months, for the last few weeks or months, let's just say, the price has been telling us that, look, you know, euro dollar is likely to face a retracement, but while the price was making higher high, but that retracement came right over here and the price started to sell. Now, given the fact that the price is close to its 50-day simple moving average and the RSI is well away from its overbought zone, the possibility is that yes, we may see some sort of a buying pressure coming in. Now, if the buying pressure comes and we break this downward trend line, that is excellent. Then we can confirm that yes, there are enough buys over here. But if it doesn't, what I would really like to see is RSI falling into oversold territory. Oversold territory over here. This is overbought, this is oversold. If it falls over here tomorrow, that is likely to be our really opportunity to get back into this trade and then really look for an opportunity with that. Now, does that make sense as so far what I've been talking about? Okay, Julian. So someone is talking about that they're still having a trouble with understanding the support levels. I will explain that once more. Now, let's have a look at the support level again. So the support level that I'm really looking at right in front of you is, let me just make this one a little bit more bigger so for you guys to understand. Right, so the support level that I'm really looking at is the low of this candle, the low of this candle, which is at 1.1788. So just over here, right? So let me change the color of this this particular horizontal line, make it a bit more darker so that you guys can see it a bit more clear on the chart. So there you go. So that is the first support level that I'm really looking at with respect to the to this one, right? And then the second level of support that I'm really looking at is the top of these ones. This was the resistance. The previous resistance is going to become support. So in order to do that, oh sorry, what happened over here? Let me just move this one back where it was, just over here. Okay, and this one, I'm gonna again change the color for this one to dark green so you guys can see it a bit more because some people are saying the resolution isn't that great. So there you go. So now we will, so I'm looking at the top of these candles and I'm looking at the second support level at 1.1618 and the first support level just below the low of this candle, just over here. The low of this candle is 1.1695 and that is the level, my friend, that I'm really looking at. 1.1695 is the level. I mean, the price can move above right from here. Right now, it can move, right? Because this is where we are looking at. And in order, if someone wants to take that trade, what you have to do is you have to go into 4-hour time frame, and then you can potentially take that trade, put a stop loss right under the previous candle's low, which is a 4-hour time frame, and then look for the trade to the upside. But this is a little bit of a risky trade because I think, you know, yes, the probabilities are that the price will move from its 50-day moving average, but slightly bit more riskier. What I wanted to see is price moving from this support level, But if price moves from here where it is right now, it will confirm a lot more strength. This is the trade for today. These are the support levels for tomorrow. That is where I am really looking at. Now, does that make sense to you guys? I'm not sure, Patrick. What do you mean by you mean 1:30 tomorrow? Look, folks, I mean, one thing you certainly do not want to do is to go into the ECB meeting with the position on. That is a very, very difficult one, because I think that is likely to not have a positive results for you. The volatility could be enormously high, so I do not think that is a good strategy to do that. So before the meeting, you wanted to have a neutral position, and you wanted to find the levels, the one that I'm really looking at. Look at the price when the ECB announces its decision at 12:45 tomorrow, and then when the press conference starts. Look at the price from these levels and then find a potential opportunity. Yes, it can potentially affect gold prices tomorrow as well. Someone is asking me that can it affect gold prices? Yes, they can also affect gold prices as well. Uh, but I'll just quickly touch on gold as well, and also on Tesla. I think Tesla is quite an interesting one. Do you guys want me to have a look at Tesla? Some people saying that they haven't been able to hear me properly. Is there any problem there, guys? Okay, so I suppose no. So just a person whoever had the problem with the Twitter, sorry, with the sound, they had their own sound. So everyone is saying that the sound is pretty clear. Okay, so let me just go through a few more questions. There are two big ones coming out simultaneously to ECB. I don't know, Julian, what do you mean by that? Please repeat the levels again. Okay, Mubarak, if you wanted to read the levels, remember this is a recording, so go back and hear that. I've gone through that twice now so far. Okay, so in relation to gold, so let's just quickly have a look at gold prices as well. So what we're looking at in terms of a gold prices is really how the price is reacting with respect to its 50-day moving average. Now, the fact that the price has moved below the 50-day moving average on a daily time frame, again, this is your 50-day moving average, is not something very, very strong. I do not like this, because I wanted to see the price to remain above the 50-day simple moving average. Now, and we've been talking about this in our daily videos, in our daily conversation, that the price is likely to break below the 50-day moving average, and that is exactly what has happened so far. The reason I was expecting the price to break below the 50-day moving average was because it was spending too much time near its 50-day simple moving average. And that was confirming me that, look, there is not sufficient buying pressure because it is not hot. Something what is hot is like how price came near its 50-day moving average and boom, it moved away. But then it came again, and then it started to side tracks, then started to move sideways, and then it stayed away for it started continued to move sideways for a long time, had a small bounce, and then it came again near its 50-day moving average. And from the last 2 or 3 days, it was pretty much clear that the price is going to move below its 50-day moving average. But we are still very much within our support zone, and that support zone runs from 1902 to 1900. Now, as long as the price stays above the 1900 mark, I am still positive for this particular move to continue its journey to the upside. However, if the price breaks below its 50-day simple moving average, then it is very likely for this move to continue from here all the way to its 100-day simple moving average. And that is the level that we are very much focused on from here onwards. So if the price cannot move back above this level, the next level that I'm really looking at is the 100-day moving average, which is trading at in around 1836. So that is the price level that I'm very much focused on for the time being with respect to gold. Now, tomorrow, let's see when the ECB announces how the price reacts to that. But if it breaks below the 1900, again, the move is going to be more exaggerated to the downside. Okay, yes, Julian, you're absolutely right. At the 1:30, we also have the jobless claims, we have the other US economic data, and that. So expect enormous amount of volatility against the dollar, anything which trades against the dollar. You are absolutely right there, Julian. Yes, Georgius, 1836, my brother, that is the level that is somewhere near where the 100-day simple moving average is trading on the daily time frame. That is what we are really looking at. Okay, folks. So once again, remember to keep follow and keep contributing, keep keep the reaction going on a Twitter. This is your opportunity to ask us questions, and I'm more than happy to answer all the questions there. And I'll see you guys next week. And it is always been a pleasure to be with you guys. See you next week then, and happy trading. Every week, Julian, every week we have webinars. Every week on Thursday. Oh, sorry, Wednesday. Bye-bye. Thanks, Val. Thanks, Stephen. Thank you, everyone. Bye-bye.